investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a 1-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA, and you can see that this week we saw a little bit of a recovery from what was lost at the beginning towards the end of September. But we are losing volume as the price is going up. And if you've been following the market, guys, you'll know that dropping volume means less of a momentum move for the buyers if the price is going up. And it also means that the sellers would be losing momentum if the price was going down. Volume is one of the few leading indicators that are promoted out there outside of the VIX, of course. VIX is a leading indicator. Volume is very much a leading indicator, so we need to pay very close attention to that. As the market moved up this week, you can see that we came very close to the 50-period moving average, which is that blue line. As long as we stay below that blue line, the 50-day moving average is going to continue to be drawn down to the point where it could actually cross the 200-day moving average, forming what's called the death cross. Now that hasn't happened yet in the diamonds, but it has happened in other markets, particularly the Russell 2000, where you can see the 50-period moving average right here has crossed on September 19th, and then the price dropped dramatically after that. The Russell 2000 is in a similar position where it has rallied up quite dramatically, but we are at role reversal resistance areas right here, and we see that the candles are very small. This is a candle that is very close to a doji, right at the role reversal resistance, very close to the 50-period moving average. So we have to be on guard because there's still a slight gap down here in the Russell 2000 that could be filled on the downside. If we look at the spiders, this is the S&P 500 index. You'll see that the price chart is very, very similar to the other markets that we've looked at, with one exception. Although there's a gap right here, this line was the former trend line, and now the price has gone up to that line. The former trend line will now become resistance, along with resistance being at the 50-period moving average on lower volume with gaps below the market. This is very bearish, so I would not get too far into any long positions. I would be using stop loss orders. You can also put in what I would refer to now as a lock profit order. That means when you have a stock that has gone up and you're profitable in that stock, you want to lock the profit in. So put a stop order in that protects your profit, especially when a stock is bumping its head against resistance or a major moving average on lower volume. Keep that in mind as we continue to look at the Qs. QQQ, that's the Nasdaq market in the power shares. You can see that I've left my fan lines up here because we bounced off of this fan line. I did believe that we would break down. We did not, but there's still a gap down here. So if we turn from this point, we will then have a lower high, which could then bring us to a point where we start to break down to retest that 88 level in the third fan line that we drew weeks ago, actually. So these are the major indices. I would again direct your attention to the VIX volatility index, best leading indicator that's out there. You can see that we had a dramatic pullback in the VIX, with the VIX actually gapping. 100% of the gaps on the VIX over the past 20 years have filled. There's only 2 gaps, actually there's 3 gaps that are left open. There's one very small gap down here. There's a gap to the upside here, and there's another larger gap to the upside here. I do believe that this gap will be the first to fill. If the VIX goes up, what does that mean for the S&P? Remember, this is inversely related. The S&P will go down if the VIX in fact goes up, and I do think that that could very well happen. We have an inverted hammer down here. We have gaps, like I said. We had a cross of the moving average back here. Everything right now is pointing bullish for the VIX, which means bearish for the S&P. So keep that in mind as you are positioning yourself. Make sure you put in your stops so that you protect the profits and limit any loss, and stay in touch with the market guys. Have a great weekend, and we'll speak with you soon. So long.